Everybody, this is Andrew from DeFiancy. All right, guys, we're just going to jump straight into this. This is your daily update. It is Friday, November the 3rd, about 7:20 a.m. About 10 minutes away from the non-farm payroll results, print, whatever you want to call it. So we're going to be live for that. I just want to kind of go over what happened over the last day. We talked about how, the market was bullish yesterday and, you didn't want to fade it. You want to kind of join it, if anything. And that ended up being a pretty wise idea, as yesterday was quite literally up only. I mean, there was no pullback. It was so strong of a rally yesterday that you didn't even come back to VWAP, which is the level I was hoping to get, some of the DeFiancy people into. Never even came back to it. It was quite literally up only from 7 a.m. yesterday pre-market to the finish. Now, you may be thinking, whoa, this is super bullish, like up only, Santa Claus rally is next. But I'm here to tell you that that might not be the case. So, I'm going to throw a little bit of water on your fire here if you're really bullish. And I'm not actually bearish, but I do see this a little differently, I think, than maybe what the chart is showing. And if you looked at just the chart right now, you'd be like, oh my God, this is like insanely bullish. Huge breakout potential if you break this trend line, which may in fact happen. I'm not saying it's not. But we need to look a little bit closer about what actually happened yesterday. So this was a face ripper, this 1.9% yesterday. But one of the things you may have noticed if you were looking pretty close was that the bullish indicators were not really signaling, meaning you actually had defensive stocks that were rallying higher than your tech stocks overall. That's not good. And honestly, just seeing the NASDAQ not performing as well as ES or the Dow Jones Industrial Average, that is not good, actually. So I'm not saying that this is all you should look at. Oh, we have to be bearish now. No, that's not what I'm saying. But that's just that's one layer of confluence. You have to say, well, why is that? Why did you not see tech and, your really obvious risk assets performing better than your utilities and just defensive stuff in general? And I think there's a reason for this. We'll go into that in a second, but another layer of confluence, we can say, that volume yesterday on the ES, which is the S&P 500's futures contracts, was the lowest since October 16th, which coincides with the recent peak before the previous break lower. Okay, so what is that really saying? That's saying that this was a short squeeze and that this was not really like an institutional bid, or I think what people are thinking, which is that like this is a huge momentum shift and that's going to keep going. Now it can, but you have to understand that when you have something that is really based on a short squeeze, you have to kind of think about this space underneath you as a weak floor, right? So to put it in perspective here, like as you were climbing up here, you had a really strong floor because these people accumulated a lot of positions. They weren't about to let the price go down once this broke out. They were going to make sure that this price went up because they put a lot of money and energy and time into accumulating large positions here. We call this accumulation. You didn't have that down here. That's the problem. And I was talking about this earlier in the week. I'm like, look, I need to see some accumulation down here to get bullish. We never really got it. We just got a giant short squeeze. And if you go back in time, I'm not going to zoom in. I don't want to spend too much time on this because we got 4 minutes until NFP. But this had happened before, guys, many times last year. Okay, so this is, I don't even know if I would say we're in a bear market, but this is a kind of like a bear market rally in that you're really just getting a bunch of people caught off sides and it's helping the price go up, but you don't really have what I would call the institutional limit up bid that you're really going to need to push this higher. So, am I short? No, I am not short. We actually tried to short this overnight, and it just never pulled back. It's still in its up-only mode, but it's dangerous. I'm looking at this as toxic at this point. I don't want to touch it here. I'll long a pullback on a scalp. Again, I'll keep it simple. I'm just going to long when I see absorption. If you want to know what that means, hang out in the Discord and I'll show you some of our strategy. But if I was going to make a bigger trade, it would be a short. And basically, when it starts to show some absorption on the top side here, really when it just starts to roll over, as they call it, that's when I would probably add a short. And we'll be giving signals out later if we get it. But I don't want a long here, right? I feel like this is a kind of a sucker's rally, to be honest. Now, does that mean that it's not going to be a real rally later? Of course not. I'm just saying this move so far, it hasn't proven itself. Let's just say that. All right. And I just want to say, literally like in 2 minutes, you're about to see some crazy stuff. So we're going to pull up the tape here. Let's go over something before we do. We have non-farm payroll. We have U.S. average hourly earnings month over month, U.S. unemployment rate, and U.S. ISM services PMI. All of these things, and by the way, this one's at 9 a.m., but all three of these big ones here, and by the way, this is a monster day. I mean, to have all of these on the same day is I feel like these are not all usually on the same day. Maybe they are. Maybe I'm not realizing that. But anyway, there's a lot of things going on today. And in about a minute, a little bit over a minute, you're about to get three of these. And it should significantly move this market, in my opinion, if they are, like if these come in hot, meaning unemployment rate is still low and you're not, and people are still getting employed to the upside, this market's going to start to reverse itself, in my opinion, because you are way up in the air right now on ES. So we're going to pull up the tape just because I want you guys to see this live. I don't have a position open right now, but right after this happens, I'm going to close this video, but I just want you to see this tape whenever this data comes in, because this is about to get interesting. So if you're looking at the right here, this is the actual orders, what actually moves the market coming in. And if you're looking over here, this is the chart. And here in about 30 seconds, you should get some crazy movements here. All right, boom, look at this. Whew, huge. Whoa. All right, guys, so let's look at this real quick. Crazy. All right, let's see what we got here.
Order filled.
Oh, you hear that? I got an order that was filled. All right, so looks like, this is bullish. So the market's going to love that. Basically, less people got employed, which is actually kind of bearish. And if you're a recession guy, thinking that's going to affect the markets later. You can look at this in multiple ways, but obviously the market's going to initially see this as bullish. And looks like U.S. average hourly earnings month over month came in lower than expected. All right, we're going to wait for 9 p.m. for the last number, and I think that's all we're going to talk about because I'm fixing to jump into some trades probably, and we'll be posting some stuff into the Discord. Until next time, happy hunting, friends.